Okay, audit evidence. Okay, I'm going to just talk to you about audit evidence. Okay, and I'm going to focus mainly on the assertions. Okay, because the assertions are the most vital part of this course with substantive procedures. Because the assertions, if you understand the assertions, you know what to test. So the assertions are like making a cup of tea. There are procedures to make a cup of tea. There are procedures to address the assertions. So like we discussed in the previous lecture, which was the introduction, we spoke about making a cup of tea, what are the procedures, and we linked that to the substantive procedures. Okay, the assertions would be the cup of tea. How do we make a cup of tea? How do we audit completeness? You see, the completeness is the cup of tea. What procedures must you perform to address the completeness assertion? Okay, and I'm going to spend a lot of time on the assertions because that's vital. If we get that wrong, you're going to be in trouble. But before I get to the assertions, audit evidence, very simple concept. The auditor has to obtain audit evidence, okay, during the audit, so that he can express an opinion that the financial statements fairly presents in all material respects. Makes sense? All right. So if you want to badmouth your ex-girlfriend, okay, you would need to get the evidence before you badmouth her. Are you with me? If you've got no evidence, then don't badmouth her. You with me? And vice versa. You might want to badmouth your boyfriend, okay? But get the evidence before you badmouth him. If you've got the facts, then it's not badmouth, then it's facts. Okay. All right. So that's really audit evidence. Okay. And these slides just go into it because, funny enough, you might turn around and say, why is there a standard? Why is there ISA 500 on audit evidence? I mean, sure, that should be simple. The old auditors, many, many years ago, they never used to document the procedures. They never documented what they did. All the knowledge was up here. So when it went to court, they'd say, where's your audit file? No, we don't have an audit file. So how did you audit the company? Oh, no, I did everything up here. Okay, well, it's difficult if everything is in your head. So whatever you do, you've got to document it. And there's a simple rule that we use in auditing. If it's not documented, it is not done. Simple. If you haven't documented what you've done, it's not done. So you can't go to court and say, no, but I did do it, and I did have a discussion, and I did test this. The judge will say, where's the evidence? Where's the documented evidence? Because if it's not documented, it is not done. Simple. Simple rule. And then another principle with audit evidence is that the evidence that you gather needs to be reperformed by another auditor. So in other words, what we're saying here, if I do a procedure, okay, so for example, I'll say, I inspected the bank statement. Can you reperform that? No. How can you reperform that? I inspected the bank statement. Can you reperform that? I say no. She's saying yes. What do you say? My question is, I inspected the bank statements. That's my procedure. I inspected the bank and it's documented. Can you reperform that? Okay. How? Okay, I've inspected the bank statement. How can you reperform that? The reason why I say you can't, what bank statement did you inspect? Was it the ABSA bank account or the Investec bank account or FNB? Did you inspect the February one, the March one, the April one? What date did you look at? The 31st of March, the 1st of April? Are you with me? A better procedure would be, I inspected the First National Bank statement, account number 1042. Okay? April statement. And I inspected the balance at the 25th of April. Can you reperform that? That you can reperform. But you can't reperform, I inspected the bank statement. Which one? What date? What balance? So audit evidence needs to be reperformable, if that's even a word. Makes sense? Okay. So when you document, you've got to be specific. Specific. Okay. All right. It's like when your girlfriend says, "What do you love about me?" What does she want? Specifics. You can't say everything. She says, "No, I want what?" Am I right, ladies? You want specifics. Okay. You want to reperform it. Okay. Okay. So in the slides, evidence, we've just had a brief discussion about evidence. Okay. Objective of the auditor, we've spoken about the objective of the auditor. The objective of the auditor, okay, is to express an opinion that the financial statements fairly presented in all material respects. How does he express an opinion? By gathering evidence that is reperformable. Okay. Okay. Then we talk about sufficient and appropriate. Okay. I'm going to just discuss it now because it's quite simple. What is sufficient? Enough. Sufficient is enough. What's appropriate? Quality. There we go. Sufficient is quantity. Appropriate is quality. Okay. I'll never forget a friend of mine. She said, with food, she had a brother, and the brother could eat. So he could eat like 100 kilos of peanut butter sandwiches. That's quantity. But she was more about appropriateness. She liked the finer things in life. She liked little oysters and you with me? So sufficient and appropriate. Okay? Sufficient is quantity. Appropriate is quality. So for example, in auditing, let's put it into auditing perspective. If you audit Standard Bank, okay, and we've discussed this before, but we're going to cover it again. If you audit Standard Bank, okay, how many deposits do you think Standard Bank has in a year? Billions, trillions, lots, billions, billions. If you go audit 10 deposits, is that sufficient? No, because 10 deposits out of a billion is not sufficient. So it's not sufficient. Is it appropriate? Pardon? Is the quality of the testing of this, is the quality of the 10 that are tested appropriate? Probably. So the 10 that are tested was spot on. It's appropriate, but not sufficient. And the standards say your evidence must be sufficient and appropriate. Not all, and. So it's got to be sufficient and appropriate. So it must be the right number of testing and the right quality. You with me? Okay. And that's really the element about sufficient and appropriate evidence. Okay. And then we're going to talk about how to obtain audit evidence. That's important. That's important because those are the verbs. And inconsistencies, they talk about your evidence must be consistent. Does that make sense? If your evidence says that your fixed assets are in a shambles, your opinion must obviously talk to that. You with me? You can't say in your opinion everything's fine, but in your working papers it's not. It's got to be consistent. Okay? So you must, inconsistencies. Done. And then assertions are vital. I tell you, for those that aren't in class are lucky because this aircon is, wow. It's boiling now. It doesn't even work. Okay. All right. So let's go. Okay. So evidence. We've spoken about the purpose of audit. The purpose of the auditor. Audit evidence. Okay. Example of evidence. Invoices, statements. Okay. Bank statements. Okay. Financial statements, journals. That's all evidence that you want to inspect. Okay. All right. So you can read that slide. The objective of the auditor is to obtain sufficient appropriate audit evidence to express an opinion, which we've discussed. Sufficient and appropriate, we've spoken about. Appropriate, which is the quality, okay? And then you've got sufficient being the quantity, okay? And then obviously this little picture shows you, it took me a few years to understand it. Didn't sound the brightest spark. You've got to get the evidence, which is the house, before you put the roof on, which is the opinion, okay? So in other words, have the evidence to support the opinion, okay? And the walls will support the roof. There we go. Okay. Okay. Then, procedures to obtain audit evidence. So how does one get audit evidence? Okay. Quite straightforward. Okay. You do a risk assessment procedure. You do procedures at the beginning of the audit to obtain audit evidence. You understand the business. Okay? By understanding the business, you're going to get quality audit evidence. You cannot audit something that you don't understand. So you need to understand the business and their model and how it works. Okay. Then you can do further audit procedures, test of controls, which was in 3701, and you can do substantive procedures. Your substantive procedures are the procedures, okay, in testing the assertions. And then obviously other information you can get. You can phone bankers, you can phone attorneys, you can speak to competitors, you can speak to staff, okay? Other ways to obtain audit evidence. Will this be examined? Probably not. Okay. This is a building block to get to your audit procedures. Now, these are your verbs, so please, this you need to know. So remember when you spoke about making a cup of tea? You said go and get a cup. Okay, the verb go was appropriate in making tea. But in auditing, you've got to use these verbs. You've got to use inspect. Okay? So what's another word for inspect? Look. Look at. But we don't want the word look, they want the word inspect. You don't use the right word, you get 0. So you can say, I looked at an invoice, 0. I inspected the invoice, a full mark. You with me? Observe, you observe a process. So that's more for controls. Okay. Happy? Confirm is another. I confirm the debtors via a debtors confirmation. I confirm their existence. Sending out confirmations. I recalculated the bank recon. I recalculated the outstanding debtors days. Okay, these are verbs, eh? They're all words of action, eh? Reperform. The audit can reperform certain procedures. You can inquire. You can obtain an understanding, and you can perform analytical procedures. What's an analytical procedure? Compare last year's to this year's. That is an analytical procedure. You look at last year's revenue, compare this year's revenue, and one would expect hopefully an increase of at least inflation. Okay. That's an analytical procedure. You can do reasonability tests. What's a reasonability test? What's the price of a burger? So if I sell a burger to you for 700 Rand, is that reasonable? No, why not? Because average price of a burger is how much? 50 bucks? Huh? 50, I think, on roughly 50 Rand. McDonald's might be cheaper, Spur might be a bit more, Rock Mamas could be about 50. So 50 Rand, I think, is probably the average. So doing a reasonability test is an analytical procedure. Okay. All right. So for the guys, the ladies will get this. What's the average price of a haircut for a lady? What's a reasonable price? How much? Okay, let's do a haircut and color. Color, okay, you say 1,000. I thought it was a bit more, to be honest. Oh, okay. Maybe. Okay, so 1,000. Why did 2,000 come in my mind? For blow, color, all that stuff. Okay. All right, 1,000 rand. Okay. Does your haircut cost 1,000 rand? Not. Okay. You can have 10 haircuts. So you with me? That's a reasonability test. So if you go and get a haircut for, if you get pay 5 grand, guess what? You're not going to pay it because it's not reasonable for you. Okay. So that's reasonability tests. Inconsistencies, we spoke about inconsistencies, huh? Okay. So the audit evidence needs to be consistent to the opinion. If the opinion says everything's fine, the audit evidence needs to talk to the opinion. Simple. Simple concept. You can read this. Okay. Assertions. Important. Okay. All right. There's two types. There's an assertion for the balance sheet and assertions for the income statement. What is an assertion? Assertions are management's assertions. Management makes certain assertions. In other words, they make certain guarantees. So management will make an assertion that all revenue is complete, that all accounting records are accurate. That's management's assertions. Now the auditor needs to determine and test those assertions. Okay, so you've got assertions on the income statement and you have assertions on the balance sheet. So what do we call the income statement? In accounting, we call it the statement of profit and loss or the statement of comprehensive income. Happy. So that's the income statement. Now in the auditing standards, they don't call it that. They call it assertions, transactions, okay? Transactions, when you hear transactions, it is the income statement. So when you see transactions, okay, this is the income statement. And sometimes they call it class of transactions.